Yeah, you mentioned like a lot of these miners are buying these ASIC machines, the most efficient ones in preparation of the halving. And you mentioned your fleet efficiency is one of the best in the industry already. It's surprising to me that you said like now is the time to consolidate because, like you mentioned, I figured that would happen after the halving, where you see a lot of these miners in trouble, they get distressed, like you mentioned, but you're kind of getting ahead to seem to get the capacity first and in preparation. And I actually did. There was a great report from Cantor Fitzgerald a couple months ago that looked at all the different miners, kind of comparing them. And I did notice that Marathon had a substantial amount of cash on hand. And so, is that kind of a strategy like to prepare for the halving? Is that you guys want to be in a strong position to be an acquirer, and you just see that as an opportunity? So you're kind of getting a lot of cash now in preparation for that. Is that the idea?
Well, so we run our business from a perspective of we need to be resilient, meaning we need to be able to weather whatever storm comes at us. And
Hmm.
if the price of Bitcoin, let's just say it drops to 30,000 at the time of the halving, not many miners are going to be able to operate profitably. And how many miners have enough cash on the balance sheet to be able to survive 6 to 12 months, maybe 24 months before it becomes profitable to mine again when Bitcoin has moved back up? So you need to have a lot of cash on your balance sheet to do that, because if the price of Bitcoin drops, the Bitcoin you have on your balance sheet is going to lose value as well.
Right.
And if you've just placed big orders for miners, you're going to have cash to pay for those orders at a time when you will be not having a lot of cash on your balance sheet. So we believe that now is the time to buy capacity because these deals take time to close. And this Generate deal was a deal that we did very quickly, very efficiently. We started working on this just before Thanksgiving. We closed it last week. Um, that's a speed that you need a very seasoned M&A team to be able to execute with. And thankfully, our team has a lot of experience in M&A. That doesn't mean we're going to stop doing deals post the halving. We're just getting started. The question
Gotcha.
right now is you want to buy quality sites. You want to buy sites that have all the attributes that make them attractive. So, for example, if I have to go and buy a site, no matter how low cost, that is fully occupied with somebody else's miners, and those contracts are going to run for 4 years, and those miners are going to be in economic trouble, and let's just say the power cost at that site isn't very attractive, then I'm not going to want to own that site regardless.
Hmm.
And I certainly don't want to buy people's machines that are running at a site because all those machines are old. Marathon is known for always buying machines at the bleeding edge of the technology curve. We're very technology focused. We're technology fully vertically integrated, even to the extent that we helped and funded, Auradine, which is the U.S. designer of Bitcoin mining ASICs. And full disclosure, I sit on the board of the company. The idea there was to design a miner that was built for industrial scale miners like ourselves, where you can tweak the performance of individual ASICs, where you can overclock, underclock, where you can manage them to profitability points and do things you can't do with these standard shoebox miners built by people like Bitmain and others. And so we think it's all about being at the bleeding edge of the technology curve, but you have to be able to do that while paying, reasonable prices. But it by no means am I in the market to go buy S19J Pros, for example, today, no matter how cheap, because come the halving, they won't be profitable to operate.
Yeah.
And
Doesn't
so
make
it's
much
all
sense.
about you want to buy the most energy efficient machines so you get the advantage of running them um, while everybody else is still on the old generation. So let me give you an example. If I have 1 megawatt of power, or let's just say 20 megawatts of power, which is kind of the 1 exahash of capacity today using S19 XPs, right? Operating at about 21 joules per terahash.
Hmm.
If I all of a sudden replace those machines with machines running at 15 joules a terahash, which is essentially what the new Auradine 3 nanometer machines that'll be available at the end of this year will operate at, I can increase my capacity by a third without using any more energy, right?
Wow. A
That same
third?
20 megawatts is now, yeah,
Wow.
because it goes from 21 joules per
To
terahash to
15.
15,
15, yeah.
right? So now I've got an extra, essentially 6 megawatts of power that I can use, which is roughly a third, right?
Wow. Yeah.
So, right. So now I can grow my capacity without increasing my energy consumption, which means my cost basis isn't going up. in my mining. And so, a lot of people get this wrong. They think I'll just buy the lowest cost machine and mine with that. It's not how it works. You need the most energy efficient machine that
Yeah.
you can get out there. And, we're seeing a whole generation shift. Think about it. The S19J Pro 30 joules per terahash came out in 2020, 2021, right? Was available for shipment.
Mhm.
Then the XP came out. It went from 30 joules a terahash down to 21. The
Wow.
XP started shipping. Marathon was one of the first buyers of that. We placed an order for 70,000 machines at the end of 2021. Those are now all fully deployed. Now you have the T21s, the S21s that are operating at 19 or 17 joules per terahash. Those will be delivered to people over the course of this year. Well, the Auradine machines will be delivered towards the end of this year, and they're at 15 joules per terahash. And at the end of the day, in a tight environment, it's the miners who have who are in the bottom 25% of cost to mine a Bitcoin that will always survive. And so our goal as a miner is to be in that bottom quartile cost-wise, because our technology is so good. We're able to optimize things by running our own pool, and our pool outperformed all of the FPPS pools in December.
Wow.
And we don't bring in third parties to that. And it's running our own firmware all the way down to the bottom of the technology stack.
So efficiency is the name of the game, is what you're saying in Bitcoin mining. And how those machines turn over quickly, and part of that's like Moore's law. And some people think it's kind of slowing down as it's getting harder and harder to fit these transistors on there, as it double them every single time. Do you see that slowing down over time in terms of the new powerful machines, more efficient machines coming on the market? Or is that not what you've seen in the last couple of years, like you mentioned? Like, how do you see that playing out?
Well, so use the numbers I just mentioned. So the S19J Pro was 30 joules a terahash. 2
Hmm.
years later, the XP came out. That was at 21 joules a terahash. So that's a
Big,
30-ish
big jump.
percent reduction, right? Then the S21 came out, which is 17 joules a terahash. So that's, about a 15% reduction. Now you have the Auradine machine at 15 joules a terahash, right? That's a further 15% reduction. So you're starting to get to a place where there's kind of diminishing returns. And
Right.
what becomes more important then is the total cost of ownership. And this is where the Auradine machines, and I know it sounds like I'm touting their horn, but I am, are so good. It's you can run these machines and target a profitability point, right? So you can essentially say, hey, I want to maximize my profitability. The operating system of these machines will then take into account the current price of Bitcoin, your cost of energy, and the global hash rate, and will tweak ASIC by ASIC the underclock, overclock, so that it maximizes profitability, all without the operator having to do anything.
Wow.
Now, that lowers your cost of ownership. Other benefits, the miners that we deployed, for example, in our UAE site in Abu Dhabi. This is a full immersion system that's running in 115, 120 degree Fahrenheit average temperature during the summertime. It's very humid, 95% humidity. How do you operate efficiently there? Well, when we did our pilot, we had 1 megawatt worth of miners running for over 100 days before an engineer had to open a container to go look at them.
Just
So
completely by
that
itself.
it just ran all by itself. So that means that you need very few people at these sites to run them. So that's two important takeaways there. One, you can run very large sites with very few people. And more importantly, you can also run very small sites economically because you don't need any people.
Hmm.
And so that opens up alternatives that let you operate and grow your capacity without having to look for utility scale hundreds of megawatts, right? It's hard to find sites that have 2, 3, 400 megawatts of capacity. They take time to build, they take time to permit, they take time to get approved by the utility. But there are lots and lots of sites that you could run that are 10 megawatt, 20 megawatt. And then when you start looking at energy harvesting, which is another thing that we're doing, where we're taking methane gas, we're taking biomass, converting it into electricity, converting that electricity into Bitcoin, then using the heat from that Bitcoin production and feeding it back into an industrial process. Now you start getting to a point where you have nearly zero cost energy. And this becomes really interesting. Now, granted, it's a lot harder to scale a bunch of 1, 2, 3, 4, 5 megawatt sites into a gigawatt of capacity. But over time, it makes you the lowest cost operator in the industry. And so I think that's what you're going to start seeing in the Bitcoin mining world is you'll see the utility scale guys operating these very large sites, and then you'll start seeing more and more of these energy harvesting solutions where people are heating buildings with Bitcoin miners, they're heating factories, they're pre-treating parts of industrial processes using the heat, and then getting paid for that. And that subsidizes their energy costs, which makes their cost to mine Bitcoin even lower. So I think it's a very exciting time of transition in the industry. We're going to see much more real industrialized machines being built, not these shoe boxes anymore, but blade-based machines where you have tanks that are have high density, and it's really exciting what we're going to see over the next 2 or 3 years.